Stocks are getting hit with the NASDAQ index now down 1.8%. The S&P index is down 0.9%. And oftentimes that leads to a decline in currency pairs currencies like the Canadian dollar, the Aussie dollar, and the New Zealand dollar on a Pavlovian reaction risk-off trades. And that's what we're seeing in the dollar versus Canadian trading here today. And it is breaking as a result to breaking through technical levels. I'll talk about those technical levels in this video and why they're so important. So let's get started. Looking at the 4-hour chart for this currency pair, I'm going to draw a red box around this area right through here. Recall that this red box what was a confining area for most of the price action through this period right through here. Yes, there were moves to the upside. This is off tariff news and then taking away the tariffs. That was a spike to the upside here. On the downside, we came down to support after that spike higher. Found support near the low of the red box once again, and then once again before breaking to the downside, not last week, but the week before on this 4-hour chart, moving down to a low price near the 141.49 level. Before starting to rotate to the upside, which we did find early sellers against a low of the red box here and rotated back to the downside. But when we couldn't break below the low price from last week's trading, we started to see a rotation to the upside. The stock market selling has also led to that risk-off buying of the dollar Canada, selling of the Canadian dollar. Now in trading here today, what have we done? We moved back into the red box and also above the swing area through here, which has the number of different swing lows that form this lower end. We also moved above the 100 bar moving average on the 4-hour chart. The swing area comes in at between 1.4268 and 1.4278. The 100 bar moving average on the 4-hour chart comes in at 1.4279. So that 78, 79 level is a key level to get to and through, and that's going to be key support really down to the 68 level here for the dollar versus Canada. As long as the price can remain above that level, the buyers are in play with work to do. Now the work to do is to get up to the 200 bar moving average here. And if we get above that level at 1.4338, then we're talking a different story, more of a tilt to the buyer's side than to the seller's side. But being above the 100-hour, don't get me wrong, being above the 100-hour moving average in the swing area is a shift into a more bullish bias, at least in the short term for this currency pair. Well, what would take the bullishness out of it? Obviously, breaking it back outside the red box, moving back below the 1.4268. By the way, also in play is the 38.2% retracement of the move up from the September low to the high price that we saw in 2025. That 38.2 happens to be right near the low of the swing area of the red box. So that just increases the level's importance going forward. So there you have it, why the dollar Canada is more bullish from a technical perspective and what traders can look forward to as a target on the top side and also as a risk-defining level on the downside. That's the important things for you and your trading. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.